dig it, Satch?
All right, what's good, everybody? Happy Wednesday already. We're halfway through the week. Whew, it's going by quick. I don't even know what day it is most of the time, but it is Wednesday. The Federal Reserve met today, and of course, they raised the rates. We'll talk about that in just a second. If you are a client of ours at Jazz Wealth, be sure to check your email for the credit score myths class that we just did last night. That'll be in there, available for replay. Of course, on our website, click on events. You'll be able to see all the events upcoming. We're getting ready to add a bunch more for Nest Egg to help teach you guys and assist with all of that. Also, if you're thinking about Jazz Wealth, you're just not sure if we're a good service for you, you might check out our portfolios. We manage all of our portfolios in-house, so you get to see the performance of that. We post it on our website, and of course, we update the performance every now on Saturday, actually. So be sure to check that out. If you need anything, any help, of course, Dustin at jazzwealth.com. Otherwise, schedule a call with me. Happy to speak with you. Well, sort of a boring day, I'll be honest. I'm a little tired. I don't know what it is. I think just kind of like there was not a whole lot to stare at. The markets were a little more volatile today. The Dow actually finished lower on the day by 116. The S&P closed down 11. The NASDAQ lost 8, but barely lost 8. It was positive most of the day. Most of the sell-off actually came later in the day. So if we go to the charts, here we go. You got the Dow on the screen there. That is what you're seeing there, that first little red blip that you see. That's what happened today. If I zoom in a little bit, you can see a little bit of red on the screen, all basically coming towards the end of the day. When the Federal Reserve announced that they were going to raise rates, no surprise, nobody really cared. What happened is when we got to the conference, when we got to where the Fed chairman started talking, that's where they indicated that, hey, we're interested in raising rates more, right? And so they were very sort of clear about that rates are going to continue to go higher. Now everyone pretty much expects that September will almost certainly include another rate hike of at least 1/4 of a point. So the Fed wanting to keep going with that. Today they raised rates by 1/4 of a point. We all expected that, not anything exciting there. So on the Dow, you see this little pullback. Now, if you're a technical trader, you see that we've got this uptrend in the works here, but now we're starting to develop maybe a little short-term one. So if you follow the markets in the very, very, very short term and you're just a trader or just curious what the markets are doing, I'm going to change this to green. We'll make it a little thicker for you. And you see this little uptrend here that's starting to form. Early to tell if that's something that holds. If the markets fall back to this level, would it hold that area? I think it's too early to tell. I like the broader, bigger, much slower uptrend that's intact at the moment. So we'll see what happens. I'll leave that there, and we'll see how the days go on. If we go over to the S&P 500, you know that we've been up here nicely over the last few days, going on 2 weeks actually. So to see the markets pull back, not a big deal. They did so very calmly today. It wasn't a very shocking move. We all sort of expected the Fed to raise rates. That little kicker, that little shocker that they want to raise rates a little bit more than expected, just helped kind of pull the stocks down just a little bit. So not a big problem there. The NASDAQ broke out to new highs yet again today. That's twice already this week. 2 out of the 3 days the NASDAQ has made new all-time highs. So much going on here. Oh my gosh. I mean, if you follow this sort of market, let me try to put it together for you. Last night, the Justice Department agreed that the AT&T and Time Warner deal was good to go. They were allowed to essentially do their little merger there, and that was okay. A lot of people thought that that was going to get knocked down, and so what happened all of a sudden is you got names like Netflix, Amazon, what was the other one? Like Fox, right? We got that going on. Disney all of a sudden. And so you got big moves in these names because a couple things have happened. First of all, the fact that, and I'll go to the charts here real quick, you got AT&T lower on the day by 6, and then of course Time Warner higher on the day as that deal's going to go through. What happened was all of a sudden people said, wait a minute, what about the Disney-Fox deal? Remember, Disney's trying to buy Fox's assets at 50-something billion, $52.4 billion. And so look at that move on Disney. All of a sudden, people thought, wait a minute, maybe that deal's going to go through as well. All of a sudden, the government's letting these sort of deals go through. And so your big leaders today, you had FOXA, there are 2 names there. Netflix on the screen there. Netflix breaking out to new highs as well. All mostly because now the idea of first the Disney and Fox deal going through is great, but also it makes you recalculate the valuation of all of these content producers, the mega content producers, because now it becomes this race, right? It becomes this race to who can conquer the content. Add to that, earlier in the day, yesterday, or maybe the day before, the net neutrality rule, big deal there if you've been following along with that, basically says that the streaming, what do you call them? Companies like AT&T and the mobile devices and internet companies can now prioritize what they give their the speed to their content. So for example, Netflix is a big data hog. So AT&T can now say, wait a minute, we're going to hold back on Netflix. We're going to push out some of our other stuff first. We're going to slow Netflix down. What that means is all of these companies now are essentially free to become their own internet service providers. So just so much. I mean, there's so many little intricate details here. I could talk for an hour on this. I think it's so interesting. So with that in mind, now you've got this sort of wide open door as to where content streaming, and the people that actually grab the content, stream it to you, all of a sudden those pipelines are all of a sudden like, it's the Wild West again. And so now, who knows? Netflix could be worth a lot more than where it's at. In fact, did I write that down? Goldman Sachs today came out. Oh, it's on Netflix. Goldman Sachs came out today and they raised their price target by $100. They went from $3.90 as their price target to $4.90. So Goldman Sachs is now officially the highest. They have the highest profit target out of every single analyst that follows Netflix. I believe there's 17 of them that follow. And so basically Goldman Sachs is telling you, if you want to invest in Netflix, $4.90 is your target for now. Incredible. So that just goes to show the smartest guys in the room, which I think is Goldman Sachs and their analysts, then the smartest guys in the room have looked at net neutrality and this deal that just went through with AT&T and Time Warner and said, whoa, Netflix is going to crush it. They have so many opportunities here. Netflix will tell you a little different though. Netflix not so optimistic. They are, and I think that was smart on their part, to the way that they kind of said that they still feel like they're doing things wrong. That really helps instill confidence that they are moving forward and are paying close attention to this. So that is a mouthful. There is so much we could talk about on that one, but basically all of those were your leaders today. If we go to the NASDAQ 100, biggest gainers were Fox, Netflix, and Dish TV in there. You got Discovery Network down here gaining 1 1/3%. And then if I go over to the S&P 500, you're going to see about the same thing there. Let me sort this out here. CBS, your big gainer there with 3.6%. CBS, sorry, is that what I said? And then, of course, the other names as well. And then on the downside today, what stuck out like a sore thumb was H&R Block. H&R Block fell 18% today. The company really, they beat earnings. Earnings was fine. Remember, they were announcing earnings for the first quarter. In the first quarter, H&R Block, of course, we expect to do well. It's tax season, right? These are the guys that do your taxes. January, February, March, they should be raking in the dough. They did really well. Actually, earnings were better than expected. The problem was they said that due to the tax code being a little more simple, right, these days, that they may have to charge a little bit less going forward, and of course that would affect their bottom line. Because of that, they lowered their guidance going forward. The stock got crushed. Look at that, breaking below the lows at one point today. So basically the way you look at this, if you're a chart reader, can you see all of that? Yeah, you can see that there. All of this here, you got highs and lows. If you like to read charts, basically anyone who bought anywhere since last September woke up to a losing position today. What sort of emotion do you think that creates in the value of the stock? If I don't know how many hundreds of millions, if not billions of shares traded hands since last September, and to know that all of those people that are long have a loss. Can you imagine the pressure on that stock? And so if you look way in the background there, actually, you could see the volume, the highest that I can find on the charts. And that's because people woke up that bought on March 16th. People woke up that bought on Valentine's Day. People woke up and bought on January. They all got up this morning and said, whoa, what happened? All of a sudden I've got this big negative P&L in my positions here. They more than likely decided to sell, not to mention the stop losses that actually probably went through today. So that's that. In other news, the Consumer Price Index, if you follow that sort of thing, what that does is it tracks the price of all the finished goods that come directly from manufacturers. Did I say that right? So manufacturer makes a product, then they charge some amount for it, to either distributors or down the line, whoever it is. And that price, that's what they're tracking. It is known as one of the most popular ways to track inflation. Well, the consumer price index actually moved to 2.8, highest move since 2012. And analysts were kind of quick to try to soften this number a little bit. They seem to think that the price of gasoline going up little by little had something to do with that. I think they kind of got that one backwards, but we'll see what happens there. That's really all I have for you. I'll answer questions if you have any for a moment. I did see California they finally made it on the ballot where they potentially could split into 3 states. It's a long shot, really, but 3 different Californias. I wonder what they would call them. I didn't read into that too much, but pretty cool. Anyways, that's really all I have for you. Let me see if you guys have some questions there. Comcast and Fox, yeah. Hey, Bruce, thanks. Yeah, no problem. Looks like we got at least 2 more rate increases for this year. And now, when they say rate increases, we could factor in 3 for the rest of the year. It's the confidence level. We were at 82% yesterday from the bonds traders. 82%, if you follow options, things like that. They think 82% that rate hike in September. That number's pushing 100 now. So it's a matter of, yes, each time they meet, they have 3 more. They have I don't want to say it, September and then the end of the year. There could be more rate hikes from there, giving it a total of 4 altogether. We'll see. So many people complaining about the rising rates when I watch the Fed live. You see mentally, yeah, I mean, keep in mind the Fed wants to slow the economy. They're trying to slow things down a little bit. The Fed has a history. If you look at all the times the Feds have raised rates, you really got to go far back. But every time they raise rates, the market tends to experience some kind of recession or some sort of slowdown. And that's the goal. So people always give the Fed a hard time, but that's what they're trying to do. Ramp up their fiber. To me, if you were going to start a business and had the capability, yes, Eddie, you got it right. You got it right. You got it right. What do you guys think of P, G, and E? No real opinion on that one. Should you move out of California? It's up to you. In Florida, I'll just let you know down here in Florida, Mickey Mouse supports everything. We don't have state taxes. It's pretty chill as far as the local taxes we pay. It's not perfect, but it's pretty cool. Oregon, you want Oregon to split. Where does it end, right? All of a sudden there's a North and South Texas and things like that. Should you sell your silver or maybe wait for a better rally? Let's see what silver's doing. Oops. Do I have silver on here? No, I guess I don't have it. Let's use the ETF. Price of silver not doing a whole lot. Actually, the price of gold, metals, in general haven't done a whole lot. Silver's doing much better than gold, at least in the last week or so. Really, to me, you're not making any money. Can I show you the chart here? Going back to last August, you can see the price of silver basically settled in there. It depends on what you're thinking about for silver. Are you one of those long-term guys? Or are you just kind of trading it? What are you doing in there with that? Let me know. Anyways, if you have a moment, hit the subscribe button. That'd mean a lot to me. I'm trying to figure out why I'm supposed to say that, but I know I'm supposed to say that. If you get a moment, hit the subscribe button. We go live every day at 1 talking about investing, in particular, usually like specific things. I think tomorrow what I'm going to do is break down a whole investment plan. For someone that's maybe 35, they want to retire at 67, or 65, they're putting money in. I want to show the breakdowns of all that to kind of lead into the new nest egg that we have coming up soon. Already testing it out on some of our clients, hint, hint. So we'll be working on that. Otherwise, going to wrap it up there. I appreciate every one of you guys watching. Have a great rest of your day. We will be back tomorrow, of course, doing the same exact thing at 1 o'clock and then 4 o'clock Eastern time. Enjoy. Talk to you then.
Take it, Satch.